Good evening, everyone. And I know it's very difficult to keep all of you focused at this time in the evening, but I hope for the next 20 minutes you all are with us. So we have a very interesting topic, and it's good to have our specialist panelists who are going to answer some of the questions, some tricky ones also. We are going to put them on spot. So let me just start with one matter which may sound a little contentious. So while, and any of the panelists, please feel free to answer. So while the world has been talking so much of ESG, after the US Trump administration coming in, the focus on ESG clearly seems to be waning off. They believe focusing on ESG is actually taking away freedom and growth, while the proponents of ESG feel that not focusing on ESG is affecting the long-term environmental risk. So what are your thoughts on that when the whole world, all this years, was propagating ESG? Now suddenly you have the largest economy of the world saying that defocus on ESG. Any thoughts on that? Any one of you?
Hi, good evening, everyone. I think, in my view, the issue is of excess. And like in Hindi, you have a term ati sarvatra varjayet. So if you do excess of anything, that becomes a problem. But this is what is general tendency with all of us. Anything comes up, then you go overboard on it, and that creates opposition to it also. You have to do ESG, and even in Indian cultural thing also, if you see, we have been recycling, we have been doing a lot of things. We don't throw away anything just like that. But then what happens? Anything becomes fashionable, so everybody starts talking of it. But more than the reporting or talking about it or just showing it as a performance indicator, we have to inculcate these habits or these processes in our day-to-day life, in our day-to-day processes. That's going to serve the long-term purpose. Otherwise, today it is ESG, tomorrow it could be something else. But the ESG, in a sense, it's good because it will help us record and put in order a lot of things which we are normally not tracking, because we consider them as given. We consider these things as a destiny or a fate or by default, but have not been measuring. What good thing is happening with this ESG disclosures is you are measuring it, you are putting everything in a proper fashion, which is going to help organizations in the long run. Because otherwise, I've seen even in my organization or even the previous one where we worked, you have been doing a lot of things, but you have not been measuring it. You have not been putting it in a proper fashion, in a reportable manner. And initially, you find it difficult also because people don't understand the concept. You don't understand what is the concept and how to do it. So I think it's overall it's going to be better, but yeah, we have to stay away from excesses, and that's my view.
Right. Anything from you, Ashish or Swati?
Yeah. So good evening. So I think he's already covered ESG concept actually, but you see, we are, I think, at this stage where you have seen the extreme weather, cyclone, there are many things are there which we have seen first time actually. So reporting is one part actually, but as a human being, it is important for all of us to focus on the environment side. That is one area, and governance is another area, because we are practicing ESG in many ways. So we have seen that without this ESG, I think a lot of investors are there, your stakeholders are there, your vendors are there, your customers are there. I think they are pushing hard to you to come into ESG actually, because it is their requirement. So you have to follow that actually. So like just for one example, IKEA is the world's largest organization in the furniture business. Actually, they have announced that by 2028, they will not take any single product from any of the vendor who will not be compliant by ESG actually. So you see that although you are a MSME in India and you are not compliant by ESG, but you are forced to follow that guidelines or that requirement. Otherwise, you will be out from the market actually. So, as a human being, we are required to see the future and the legacy for our children. And as a corporate, in a corporate world, we have to see that what is the survival for us.
Swati, any quick thoughts on the divergent
So
views?
I think
world
they've
is
mostly
taking?
covered everything, but just to summarize it, see, political narratives are very short term, and ESG is a very long term commitment. Also, the capital markets would be valuing organizations on the way they move the needle on the ESG front. And since we are here among the finance fraternity, ESG definitely has a financial implication for the business, and it's good for business continuity. So I don't know why uh, we should be, swayed by a short-term narrative being built by.
Absolutely. I think it's a
I
long term
guess.
commitment from all of us. Mayank, if I can come back to you, do you think investors today, when they are taking decisions on investments, are they making ESG as one of the key decision making factor?
Yes, I think what is happening, there are multiple factors influencing the investor decision. So, one is obviously you have regulatory requirements, because this is something which is regulatory requirement. So, if you are not following the ESG path, you are on the non compliance part. Then, another is, in my view, a lot of impact is also due to the risk management. Today, if non-compliance to ESG could impact your long-term sustainability of the business itself, or even I would say your existence as a going concern. As Ashish said, what is happening today, it's mandatory for the top listed companies, right? Now, not for companies beyond that, even if they are very big in size in private companies, and definitely not for MSMEs or. But what is happening, since it's mandatory for the listed organizations, they in turn and they have their reporting requirements of the supply chain. They are asking their vendors to comply to all these things, and that's where you are stuck. And these companies have given deadlines, many of them, to your suppliers, that okay, by this year you have to be compliant to this, and we will not be buying your product if it's not compliant. So in that sense, it's putting you at the spot, because if you don't comply, there are other ones who are complying, and people will go, because for them again their customers are asking. So like for the company where I work, it's in synthetic rubber. So for us, major market is the tire manufacturers. Now tire industries are being asked by the car manufacturers, which many of them are, say, Korean, European, these kind of companies. So they are asking, they have given a mandate to the tire manufacturers that okay, by this year you have to comply. Now in turn they are asking their vendors. So I may be a private entity, I may be not have that reporting requirement legally as directly as a company, but for supply chain part, I need to report it to my customer, and they have already started asking for certain information, and that's going to increase. So that is one part. Another is, they are also looking at companies to link ESG and the financial outcomes. How is your ESG performance, and then how are your financial outcomes? Then investors are also looking at, in terms of financing, the green financing, because it has now data proves it's not something which is negative for your P&L. It's comparable, it's competitive. So there are multiple factors, and that's why investors are pushing more and more for ESG. Boards are going to push more and more, because it's not something which you can defer anymore. You have to be ready, and better sooner the better.
Absolutely, goes without saying. Ashish, before I come to you, let me go to Swati. Swati, you are part of Vedanta Foundation, which is doing so much on the ESG front. How do you actually communicate to stakeholders all that you guys are doing on the ESG front? And what is it that takes, in terms of the communication strategy from an ESG standpoint?
So see, the investors always have access to the sustainability report that the companies put out. But what finance can do more? Now, finance has a lot of touch points with the market. We talk to credit rating agencies, we are talking to the lenders, we are talking to the stock market. So, one, there is a platform for finance team to talk about ESG. How do you then proactively push that communication out? Uh, I think one is you. So there are thousands of ESG metrics that the regulatory bodies want us to track. You have to identify relevant metrics that impact the financials, tie them to the cost of capital, tie them to the capex, asset life, risk to the business, and integrate them in the communication that you put out. So you have to just knead it in with your, say, MD&A in your investor presentations. So usually you would see organizations have a financial, operational performance and ESG performance. Rather than doing that, I mean, add just one slide which links your ESG metrics to the cost of capital, how it is trending. So it gives teeth to the ESG that you are tracking actually in terms of financials. That is what I mean. Track relevant metrics. Two, being again in finance, I mean, we have put in a lot of controls. There's a lot of assurance that the finance teams do. Extend the same to the ESG tracking and also communicate it proactively. So it will add credibility to the ESG metrics that the organization is putting out.
Right.
Third is you can also talk to the investor community about the governance process that's put in place in any organization. I'm sure at the board level, the capital allocation decisions, the management incentives probably, the capex decisions are taking into account the ESG risks. So you just need to go out and communicate how you are, including them in these decisions and how a robust governance framework has been designed around ESG, which in turn, gives returns to the organization in terms of finances. So these are the 2-3 things that I can think of what finance can proactively do to communicate on ESG.
Right. So Swati, it's not just about doing, but also communicating it, right? Ashish, coming to you, and I'm just taking a clue from what Swati said in terms of a framework for ESG. How does it rating for ESG? First of all, are there any ESG ratings, if at all? And if there are, then how does a rating agency even evaluate an organization based on whatever they are doing on the ESG side, and who are actually referring to these ratings, and how important are these ratings?
Great. Thank you so much. So I would like to just ask from the people who are here that are you aware about ESG rating? Anybody has done ESG rating till now for your organization? Okay, great. So as he asked about the ESG ratings, in India, this framework is already there. And like credit rating, because we all are CFOs and the finance professionals, so we are all aware that what is credit rating actually. So the same way the ESG rating concept has come, and this government has taken the initiative, and they have appointed SEBI as a regulator, and SEBI has given the license to some 19 companies till now for the ESG ratings. So ESG ratings practically in India is now live, and you see the advantage and then how the ESG rating will help you and all these things. So practically there are two kind of rating agencies are there in ESG rating also. One category 1 and category 2. So category 1 rating agency, why I am discussing this thing, because this is a new subject. So once we are discussing, you should know that what are the benefits and how it works. So category 1, it includes the entire financial instruments and the ESG parameters you can certify or you can rate. But in category 2, only the ESG parameters you can rate actually. So these two kind of licenses are there. I am from a Resurgent, from a company called Resurgent India Limited. We also have taken the ESG rating license from SEBI. We are doing the rating on the category 2. We have not taken category 1. So we are rating the ESG parameters actually. How it is done and all. So for the entire ESG rating, the framework has been given by the SEBI. So all rating agency has to follow the same framework which has been given by SEBI. Only thing is that method can be different for evaluating the process. So we have to develop a software where it will capture all the information. So suppose his company is planning to go for ESG rating. So they have to give the data which we require as per the framework, which will be the areas where they are working in the environmental side, social side, governance side actually. So all parameters we'll take. Then we will put it in the software and we'll get the rating and we'll circulate it to the public and to them also basically. So this is the process of rating actually, although it is not compulsory in India, and rating can also be taken by the issuer in case of financial instrument or the person who is investing. So it is on both the ways actually. So suppose I'm the investor in a company, I can go to the rating agency and I can ask that his company has to rate. So he can give I can give the mandate to the rating agency, or he can go suo moto that I am taking this much of fund from the market, I want the ESG rating actually. So this is the requirement also. So you see that for ESG rating, so there is some cost also which the rating agency will charge. But although it is not compulsory till now in India, but hopefully very soon it will become compulsory to certain category of the corporates. But if we see till now in last 1.5 years, there are many corporates those have taken the ESG rating. And the advantage of it actually, if you see, it is a third party validation. Whatever you are doing ESG reportings and all, you are doing them yourself actually. Here the third party rating agency is evaluating your parameters, evaluating your all framework and issuing the rating, which will help you to interact with your investors, vendor, customers, everywhere. All the stakeholders will get the advantage of it actually. In turn of it, you may get the lesser borrowing cost, you may get the larger investor also, you may get the advantage of the global contracts. So all these things are there. So you see that this is one of the instrument which everybody should try. And there is a very small cost of it actually, but you will know that where you stand in the ESG parameters actually. And it's a third party validation actually. So it's a public rating also. So it will be known to public also.
Right. So Ashish, I'm help warehouse this data because ESG is a journey. You may want to look back 10 years and see how have you progressed on the ESG side. So just tell us a little more about what platforms can we use and are there any challenges with those platforms?
So I'll talk about whether technology and digital platforms can help you scale up or help you in putting together your ESG data. So is it a yes or a no? It's a vehement yes, because if you would see, the only function in an organization where people trust the quality of the data is finance, right? So we have aced this art of building large scale functions, basis technology and digital platforms. But it comes with a caveat. You cannot scale a platform which, so you have to first put the ESG governance in place. You have to identify ownership, data points have to be defined correctly. There has to be a framework that has to be designed before we, even jump into technology and start gathering that data. And so what technology can give us, it can give us data clarity, because automated data capture would reduce manual errors, it will reduce audit risk. It can give us traceability, which is a metric that is, so it will give you audit trails, right? And this is something which is increasingly the expectation by the regulators, by the lenders, and it will also give you integration possibility. So it will sit beside the data in the financials and operation systems, and you can integrate, you can take out insights, you can forecast, you can do scenario analysis. There are multiple platforms available. The organization can go ahead and build something of their own if they have the technological prowess. I feel that, it depends on the size of the organization, the kind of depth are you looking at, whether you want to go in for an in-house platform or you want to get a third-party consultant, because they also bring a subject matter expertise, correct, which is, they have worked across the industries and they are the best players to help you out on that.
Perfect. Since we're running short of time, I'll just ask one last question to Mayank, and Mayank, if you can quickly answer that. after all the effort that goes into doing ESG, do you think that investors or any stakeholders give any kind of premium to organizations which are really doing good job with ESG, either in terms of choosing those companies over others, or even when you're talking about green financing, do you get better cost of finance if you are very highly ESG focused?
I'll keep my answer short because we are running late. So, in one word answer is absolutely yes. So, yes, you are getting preferable financing, and in my view, it's much more beyond the financing part alone, because now for many businesses, it's a question of sustainability, or to say business continuity. Because if your customers are asking for ESG related reports, they are asking for your performance metrics and not just one or two, the entire data. Now, if you don't do that, ultimately your customers are going to stop buying from you, because if your customers are required to report all these things in their annual reports, if they happen to be listed organizations, they will not buy from you just because you are not doing what you have to do from on ESG. They will find some other source. So forget about financing or even the cheaper cost or anything else. If you won't have customers to buy your material, what will you do? Your complete business continuity is at stake. So in short, it's definitely a requirement which have to do. And in my view, it's just a matter of time. Sooner or later, it's going to come for most of the organizations, except for very, very small ones. And they are also at the risk because, as Ashish said, because if their customers happen to have this requirement in place, even they will have to do some reporting. But otherwise, it's better we get ready on our own instead of when a requirement comes, okay, from next financial year, you have to do this reporting. Then you are stuck and you will be running against the time and you won't have any other option. So better you take your time, get things in place, because different organizations would be at different stages of maturity in terms of tracking these details, in terms of maintaining a record. And capacity building is a big part which needs to be done in my view, because if you go and ask these ESG concepts to say 10 companies, the people in 10 companies, you will find 10 different answers, because many people won't even be understanding or won't even have that kind of thought process to say, okay, what is the meaning of that? Like simple thing, if you ask somebody if your office is disabled friendly, almost everyone will say yes. But now, if they don't have a ramp for disabled people to get into it, but people, and I found it even in my circle, and normally the answer is yes. But when you ask this question, oh, we didn't realize it's required in ESG. So that's what it is. It's a matter of survival. Thank you.
Just to add on it, I'll take 1 minute on the finance side because this is my subject. Actually, I'm dealing on regular basis. So ESG funding is one of the very large subject. Actually, we all CFO will be redundant if we will not go for ESG funding after 5 years. Actually, government is doing a lot. International agency, because we are dealing with funds. So the funds which are in India, they are not getting funds if they are not ESG compliant or they are not having the ESG aspect in the fund investment. So one thing is that the funds will be dried up if the ESG will not be there. Other than that, the government of India, SEBI, has come out with a circular on June 5. They have made a framework for ESG bonds. So you can, as a corporate, you can raise ESG bonds in India. The first bond which has come in India, it has come in the month of June itself. L&T Limited has raised. You see the advantage of it. I'll just give with the example only. So they have raised this ESG bond, first bond in India. They have raised for 3 years. Their borrowing cost was for basically 5 years, and they have raised for 3 years actually. So you see, they got 15 bips advantage in the overall borrowing cost, and there were many takers actually. So like mutual funds, insurance companies, they are also bound to invest in the ESG sector actually, or ESG requirement, ESG led instruments actually. So this will be for all of us when we are working in a corporate, because fundraising is one of the major aspects, either debt or equity. We have to see which are the instruments, which are the areas where we can go and we can raise money through this instrument. This will get you the funding, faster funding, and the larger funds also, and the cost of the funding will also be less.
So since we've already run out of time, we'll end here. But thank you, Mayank, Ashish, and Swati for